Welcome, dear traders. It's me, Kate Stichina, and you're watching a recap of the Asian session. Asian stock markets kicked off Thursday with a drop. They were gripped by pessimism following a decrease on Wall Street. Yesterday, stocks were up amid an upbeat inflation report. However, the euphoria did not last long. What triggered such a sharp decline? Watch our video review and find out. Let's start. The main reason for the decrease was the Fed's rate decision. Market players were not surprised by the size of a rate hike. They priced in a 50 basis point rate increase a long time ago. Investors were hoping that the Fed would announce rate cuts in the middle or even at the start of 2023. However, it did not happen. It's extremely difficult these days to predict the Fed's future moves. As a rule, Fed policymakers provide hints about the possible changes. After that, investors make their predictions based on those remarks, and then the regulator makes decisions that are in line with the market expectations. However, Jerome Powell's speech at the press conference yesterday broke this formula. Given that inflation may have already peaked, the central bank should have moved towards a dovish stance. This is why investors were extremely surprised when the Fed announced further tightening. Powell also said that the Fed does not want to lower interest rates soon. The regulator is also ready to sacrifice economic expansion in order to tame inflation. Powell admitted it in his speech. He told reporters that he wishes there were a completely painless way to restore price stability. There isn't, and this is the best they can do. Wall Street plummeted immediately after Powell had crushed hopes for a shift to a dovish stance next year. As the Fed remained committed to aggressive tightening, the US dollar got the second wind. After a sharp fall to a 6-month low on a Wednesday, it managed to recover to 103.90 in the Asian session. The Fed chair suggested more rate hikes. It means that the greenback could also climb higher, although it's still quite far from the October high of 114. It may approach this level in the near future. Today, it has extended its winning streak. In the Asian session, the US dollar index was moving in the intraday upward range of 103.60 and 104.00 versus its main rivals. The outlook for the US currency at the end of this week remains bullish. The yen dipped following a strong increase in the greenback and a sharp jump in the range of 134.50 and 136.00. The dollar-yen pair broke above the resistance level of 135.00, rising to 135.90. On the Thursday morning, trading was carried out in the bullish corridor of 135.20 and 135.90. The yen was rather volatile, but at the same time, it showed a steady growth. The Bank of Japan has been sticking to a neutral stance for a long time. This is why the yen has depreciated considerably against the US dollar over the 2 years. In addition, the widening yield gap between the Japanese government bonds and US ones is also an extremely negative factor for the yen. As a reminder, the Bank of Japan keeps the yield on a 10-year debt at around 0%. US Treasuries are rising thanks to rate hikes by the Fed, winning luster with the traders. So the yen is losing appeal as a safe haven currency in the times of market turbulence. The US dollar remains an undisputed leader among safe haven assets. The commodity currencies also lost momentum. Besides, news from China is also extremely negative. The latest reports showed a contraction in the manufacturing sector and a weak demand. This is bearish for the Aussie as China is Australia's main trading partner. It means that the Aussie might stay in the bearish corridor for quite a long time. It was trading at 0.6791 in the Asian session. The AUD-USD pair slipped in the range of 0.6790 and 0.6871. The quotes were falling down rapidly due to a strong US dollar. They approached the psychologically important support level of 0.6800, and the pair is likely to drop to a 3-week low of 0.6710, which serves as a support level. The New Zealand dollar had a similar dynamic like the Australian dollar and the yuan. The Kiwi resumed a downward movement, declining in the bearish corridor between the resistance level of 0.6467 and the support level of 0.6377. It edged lower to 0.6395. However, there is a high chance of a further drop. And that's all for now. Hit the subscribe button and stay up to date with the latest market news with us. See you soon.